it's here. I mean, Amazon is not a fluke. It's a successful business model. Whether that's going to bypass the retailers, it won't matter if the core of our strategy is for our brands to be distributed either through retail or direct to consumer. That's just another outlet for us to make more revenue.
Welcome to Seeking Alpha's CEO interviews, informed conversations with the best and brightest CEOs in the publicly traded markets. Quality of leadership is a decisive factor in stock performance. Our show provides intimate and in-depth investing discussions with industry leaders across all sectors of the marketplace. We publish excerpts on social media platforms and the full conversations on seekingalpha.com or on our highly rated Seeking Alpha mobile app under CEO interviews.
Welcome back to Seeking Alpha. I'm Josh Kincaid, capital markets analyst, and today, interviewing CEOs. My guest today is Bob Fireman, is the CEO of MariMed, available on the OTCQX under the ticker symbol MRMD. Bob, thanks for being with us on CEO interviews.
Good morning, Josh, and appreciate the opportunity to speak to Seeking Alpha and all the people out there.
Absolutely. I wanted to first talk about a transition you guys had from the initial onset to where you are right now, and I think we'll start with that. The fact that MariMed, you guys used to be a seed to consumer company, and as an advisory firm, you procured state licenses for your clients, you developed cultivation facilities and then leased them back, and then you provided industry-leading expertise to the operations of those firms. However, you guys made a transition from cultivating businesses directly to the ownership of those cannabis licensing in that high growth areas. Bob, what motivated that transition?
Sure. Well, unlike a lot of other MSOs, our team has been together for a decade. And back then, the applications out east were for not-for-profit, cause-related competitive environment. So we advised people that had a local purpose. We wrote the applications. We gave them all the scientific and technology background. And when they won, we developed the real estate, developed the facilities, created the workforce, trained everybody, provided all the best practices, SOPs, and ultimately licensed the brands that we created. Back then, investors didn't want to be touching the plants. A lot of guys said, oh, legalize marijuana, I'm in. But between their wives and their lawyers, when it came to writing the check, they didn't want the taint that the illegality had around the business. So when we merged into the public vehicle on the OTC, things were still a little difficult. And I think it's when the CSE started to percolate and we walked away from being one of the first RTOs in Canada on the Canadian Stock Exchange. People started to say, why aren't you a fully vertical integrated company? And some of them we couldn't, because as a not-for-profit, some of these states still have not-for-profit status in Delaware, where until they go adult use, they won't be able to own the stock. So they're stockless, not-for-profit companies. However, being a public company now, we wanted to report the total revenue from the cannabis operations, instead of, as an advisor, charging consulting fees, management fees, rent, percentage rent. So around, I think 2 years ago, we said, let's roll them all up. So to date, we rolled up Massachusetts, we rolled up Illinois, and we just signed a final contract to roll up Maryland. Delaware, Nevada is still under consideration from the state for approval, and Delaware is still a not-for-profit, so there's no rolling up until they change the law. Those roll-ups, in the advent of adult use in Massachusetts and Illinois made 2020 a transformational year for us, where we started to roll up and develop our facilities in those states, get the benefit of the adult use test. That was transformational. In 2021, we rolled the revenue that we had created in late 2020, and we had another year. So we doubled our revenue in 2020. We just doubled our revenue again in 21, and we more than doubled our EBITDA and earnings. So the concept now is to be a fully seed to sale, integrated, to be able to report the total revenue from cannabis sales, and to take that power and that positivity to the next level.
So Maryland is still medical, but you guys are in Massachusetts and Illinois, Illinois being a newly emerged market. Are you looking at limited license states too? Florida, Arizona, some of these really, really competitive areas with really high expensive $25 million in some cases per location because of the limited access. You guys are operating in 6 states, at least housing at least 7 operational dispensaries and at least 4 cultivation processing facilities, at least by the time I researched that. Maybe it's more now. Are you looking at other limited license states versus, an open market? What is the strategy when you are looking at these areas?
We need to expand. We're poised for growth, being positive cash flow, and having award-winning brands. We look at other states where for M&A, where we find single operators that share our vision and mission of hard work, quality products, and improving the lives of people that use our products. So as competition gets harder, we're in those states looking at acquisitions, whether that's Michigan or Ohio or Missouri. Florida's a little different. We also have award-winning success in writing applications. So we're applying in Connecticut, new RFP. We've applied in New Jersey, and we're looking elsewhere. We just won a provisional dispensary in Ohio in the lottery, and we're looking to go vertical in Illinois right now. We just acquired a craft grower license, and we're building out a facility in Mount Vernon with 14,000 feet of canopy. We'll now get vertical in Illinois to support our 4 dispensaries, and we are allowed to have up to 10. So our plan and intent in Illinois is to have 10 dispensaries, be vertically integrated, and to take our products into the robust Illinois wholesale market. So we're looking. In Maryland, you say it's medical only today. It's on the referendum in November to go adult use. And there's bills before that legislature to put some definition, hopefully in what the law will be when if it's passed by the voters in November. Would I like to be everywhere? Yes. We believe that our brands need to be in every state where it's legal. We believe that the world's changed a little bit, so we need to look more like a consumer packaged goods company, and branding and distribution will be the success of the future.
I want to talk about some of your products that you have available, but you mentioned this vertical integration effort you've added to Massachusetts. So you grabbed Greenhouse Naturals in Beverly to add a second retail location for your vertical integrated operations there in Massachusetts. Are you at all concerned about direct to consumer sales? In California, we're seeing some of that where it's bypassing the retail shops. Is that at all a concern for you?
No, I mean, it's something that's part of the game. We have our related delivery companies here in Massachusetts. We believe that direct to consumer is important. We're looking, we've delved a little into the CBD world. And we see companies like Charlotte Web doing most of their revenue direct to consumer. It's here. I mean, Amazon is not a fluke. It's a successful business model. Whether that's going to bypass the retailers, it won't matter if the core of our strategy is for our brands to be distributed either through retail or direct to consumer. That's just another outlet for us to make more revenue. So whether we partner, we've talked to delivery services in California. We will be in the direct to consumer business. Obviously, you can't cross state lines with THC, but we're looking seriously like that in every state that we're in.
And you're offering products, I'm assuming more and more. You've got cannabis genetics that producing flower concentrates under the Natural Heritage brand. There's cannabis infused products in the form of chewable tablets and drink powder mixes under the brand Calm Fusion. There's natural fruit chews under the Betty's Edibles brand. You have cannabidiol formulations under the Florence brand. You license your brands and product formulations as well as leasing cannabis facilities, and announce that you've launched a new vibrations, those high energy drink mix. So you're marketing a different segment, I guess, than the traditional ready to drink, the RTDs, and you're having this powdery drink. So this is a all natural drink mix made from full spectrum cannabis, providing full focus and energy, mind, body. And I'm curious about why you went for a drink mix. Beverages historically have a really high overhead expense. Was that the choice, or what made you choose a drink mix, Bob?
Well, we've been dealing with water soluble infused products for years. We see the beverage category being a huge, in every state. And we see a lot of our friends, we support them with these infused cans. There's challenges to moving water into dispensaries that have limited vaults and storage capacity. So we came out with our new marketing team with some really special people from alcohol industry that built some real great brands. And we figured we would get the leg up by having a powdered drink that had high energy for the people that wanted to be active in cannabis. So we're rolling out vibations in a bunch of states right now. The feedback is it's amazing. We may ultimately be in can drinks, but right now we're killing it with our lower cost, higher volume, easy to use, same great effects from drinks. So Vibations is killing it. You mentioned Betty's Eddies. Betty's has been amazing. We're looking forward with our craft license to reintroduce it into Illinois. Back when the medical program started in Illinois, we partnered with an MSO, and Betty's was the #1 product in the state of Illinois, and people are saying, when is it coming back? We launched it in Massachusetts. It's the top selling fruit chew category. It's killing it. It's killing it in Maryland. So we're taking the top brands like that. We've upgraded our marketing department. Our K-Fusion products are great. Vibations is great. And we're just launching a vegan and dairy ice cream, cannabis ice cream here in Massachusetts, hopefully in the next few weeks.
I always find it interesting with local niche products. So vegan ice cream, something with the Northeast and ice cream. I love myself some ice cream, but we can't have anything in Washington State that requires refrigeration. Definitely nothing that requires freezing. So always interests me to see what locals are doing. And yet you're still on the track for looking at acquisitions. So you haven't stopped. Is there a method to your madness, Bob? Are you looking at specific regions? You're in the Northeast, you're in Boston, I'm in Seattle. Are there specifically just emerging markets and new markets that you're looking at? Is there specific regions that you want? Because you've looked at growth and expanding your footprint to legal cannabis states throughout new license applications, and you've done it through mergers and acquisitions. You've announced the definitive agreement with Kind Therapeutics. That's a leading vertically integrated cannabis operations in Maryland. And you have definitive agreements to acquire craft cannabis licenses in Illinois. So you're obviously looking around, and most of them are kind of in your backyard relatively. Is there a strategy, or what is your process when you are looking for potential acquisitions and your M&A plans?
Well, every state's unique. That's it. I mean, the Washington market is a unique, mature market with a very hard regulation. There's a lot of people hurting in Washington. I mean, Oregon. California, that had the best of everything, is in turmoil. Some iconic brands are suffering with limited shelf space and regulations on the canopy and the cultivation. You know, we're facing challenges from the black market, from the overgrowth of quality cannabis in California that's coming east is a challenge. So we look at mature markets. We want to be in them on a limited basis that we can make money. We're not just looking for market share. We're looking for revenue and earnings for our shareholders. So we're looking at the new states. But I mean, we looked at once at the East Coast. I mean, the states like Pennsylvania, New Jersey, we're in Delaware. We'd love to be in Virginia. South Carolina has something before its legislature. We'd like to be in South Carolina. We're looking to partner in Georgia. We will be in the Florida market, though it's an unusual, challenging market without vertical integration. We would have to partner with one of the existing license holders and only be able to get into their stores. States like Arizona have had great programs, both with the medical and the now adult. So we're looking at Arizona, Missouri, Michigan, Ohio. We want our brands to be everywhere when prohibition comes. We want to have consumer recognition of our brands and the quality of the trust and loyalty, and creating products that fulfill the needs, whether it's high energy or relaxation or some of the issues that people get relief, whether they have epilepsy or MS or Parkinson's. So we want to be on the forefront of having a brand that stands for something, that supports our mission. And so far, we've been very fortunate to have that created for us. And now we're looking at more professional ways of continuing that message to get to a broader audience across the country.
So there's a lot that's going to happen before prohibition ends, and you're out there strategizing and trying to put yourself in the best position that you can. When you're doing that, how do you make the decision between, with your mergers and acquisitions, how do you make that decision between issuing equity versus issuing debt? You have no debt, which I'd like to ask why. Seems like a really easy way to further your expansion. But with a low price in stock, it probably isn't that advantageous to issue stock for these M&As. How do you make that choice, Bob, between debt and equity?
It depends on the amount of money and the opportunity. So right now we took down a $23 million equity facility in February, and we have access to additional from our partners at Hadron Capital. So if we need money, we have a financial partner to support it. Obviously, we'd rather take in equity when our stock's $5 rather than 80 cents. We don't want to be dilutive. We set forth a strategic growth plan. One, to consolidate all the businesses we built. Two is to expand deeper into the states that we're in. And three, to add additional states through M&A and other footprints, and to expand our brands. We are sitting with over 20 million in cash, with positive cash flow. So we have enough debt and access to capital to continue our growth without needing any additional funds. I can't say that about a lot of other MSOs. So if I had to take debt, the banks who, without a lot of equity in the marketplace, a lot of these banks are approaching us with what they call is acquisition funding, non-recourse. The rates are still high. In the old days, getting double-digit debt and having to pay millions of dollars in interest to develop a facility that would take a year and a half to cash flow is high risk if things don't go right. So MariMed sits uniquely. We have cash. We have funds to support our growth. If something large came together, we would look at where our stock was at the time or what sort of debt could be advantageous to a targeted acquisition. But whatever we do, it has to be accretive to our stock. So if I could borrow debt, non-recourse, at a 3 times multiple of EBITDA on an acquisition that cost me 5 times, and I knew that that would turn around and had the cash flow to support the operations, I might look at that seriously. But right now, we don't need any money, which is a great position to be in.
And yet your stock price has been trading relatively flat since the onset of the pandemic. With the lack of independent movement, as cannabis stocks seem to roll with the momentum of legalization rather than independently of their own fundamentals, or even technicals for that matter. What are you most excited about as it pertains to your stock price? Are you looking more towards the initial impact of banking legalization or federal legalization with it helping your stock price?
Well, we looked at both. I mean, obviously, if there's a rumor out of Washington, the cannabis market goes up. But it's had a great retraction. I mean, the good news for MariMed is you say it's flat. While the industry was coming down 40 to 60%, we went up over 100% last year. I think part of our thing was getting our messaging. They wanted to know that we could consolidate these assets and increase our revenue. We've proven that. We said we'd do it. Now we've done it. We're still at a low multiple. We need to get our story out. Telling the folks at Seeking Alpha and others, we'll get our story that there's a MariMed story, that we're not the biggest anymore. We're not the flashiest, but we grind it out every day. We have validated management, brands, and we make our numbers and we make profit. We're going to align with people that share our vision and we'll get bigger. And hopefully it will be reported in the value of our shares going up. I mean, we just came out with fantastic year-end numbers for 21. All the analysts said great, and they still recognize that our multiple is low, and we're considered one of the most valued, best buy valued stock to go up in the industry. But the stock market's crazy. We have this horrific thing going on in the Ukraine. We have inflation, and cannabis is not the biggest deal in the world. And we just know that if we continue to make our story known, we continue to grind it out every day, we're going to get more investors, and our long-term strategy of our shares will go up.
Well, you recently reported fourth quarter results. You mentioned that early on in the interview about doubling your revenue, 31 million, full year revenue of 121.5 million, an increase of 52% and 139% respectively. So compared to the same periods from the previous year, your gross profit of 15 million and full gross profit of 66 million, with an adjusted EBITDA of 83 million for the full year. With all of that, Bob, what would you say to skeptical investors who are still sitting on the sidelines?
Well, I think there's more people understanding that cannabis is here to stay. A lot of the skepticisms were that we were going to be regulated out of business, now in 33 states and growing, with a $20 billion in revenue, with all the money the states are making, and all the good things we're doing for the people. You know, I think the skepticisms will come in. They want to see stable companies that have professional management, that make their numbers. So I think the fundamentals of the industry are strong. And I think, when they look at MariMed, we're profitable, we have the highest margins and a validated team, they'll start to buy our stock.
And yet the cannabis industry has been met with mixed feelings from investors following the decline in stock prices across the board. Bob, what are your biggest potential drivers for your revenue growth over the next few years?
Sure. Consolidating the 5 states that we developed, that will organically take our numbers to continue the path of increased revenues and profits. Getting our brands outside so that we now have market share in let's say 10 to 15 states across the country. Obviously, getting deeper in the states that we're in. You mentioned the Beverly. We'll have a 3rd dispensary as well this year. We're doubling our capacity in the states that we're in. In Massachusetts, we're doubling our facility, increasing our supply of cannabis, getting new technologies to give us more efficiencies for our award-winning products. And we're well on our way to being a tier 2 and hopefully someday a tier 1 MSO.
This is the part of the interview where I like to make your compliance officer sweat a little bit when I ask you about your thoughts on the industry over the next couple of years. Bob, what is your crystal ball prediction for the cannabis industry? What are you seeing in terms of the future, whether that's global legalization or your future with MariMed? What does the future look like over the next couple of years as it pertains to the cannabis industry?
Well, we're becoming worldwide. I think some of the things going on in the UK and the EU will make this more of a global industry, world industry, South America. And, but I see safe banking happening. Obviously, the issues in Washington remain. We thought we'd get lucky this year, but a lot's happened in the Congress. So I look for safe banking. I don't see legalization in the full gamut coming for at least 3 to 5 years. I think that safe banking will open up banks and make things a little easier. It will hopefully give us a path towards NASDAQ and some of the US exchanges that have larger investment bases and get more money into the industry. The fundamentals of the industry are strong. I think more competition is a good thing. People better get their numbers and their margins equal to ours, or, the idea when you just sell pot legal, you can get whatever price. I think price pressure is coming. I think people have to be smarter. I think our companies, what we've done is what hopefully will be a model for other people to follow, so that this is a great industry with great revenue and great earnings that people can make money by investing in our company.
Where are you at, Bob? Where can people find you at? If there's some investors who want to learn a little bit more, they can obviously find you on the OTCQX under the ticker symbol MRMD and probably MariMed.com. Where else are you at?
It's MariMed Inc.com. You can find us at info@marimedinc.com.
All right. Sounds good. I think with that, we're going to have to wrap this one up. So I want to thank my guest, Bob Fireman, CEO of MariMed. Again, ticker symbol MRMD. Bob, thanks for being with us at CEO Interviews.
Josh, always a pleasure, and thank you. And thank you for the support you give the industry.
I appreciate it, Bob. I'm Josh Kincaid. This has been another CEO Interviews by Seeking Alpha. Don't forget to like, share, and subscribe. Thanks.